Ilya, do you want to just tell the crowd a little bit about Oxygen, a little bit about what you guys do?
Yeah, so you're right. So Oxygen was born about 4 years ago. Dodo Telecommunications, which was run by Larry Kestelman and his cousin, they had a very successful run. The company was about 11 years old and was sold to a public company called M2 for quite a substantial amount of money. I suppose what I did at that point, we were sort of dabbling in direct investments prior to the sale into some tech startups, into some non-tech startups, and they were sort of not really structured very well. And so we sort of helped them along, but it was all over the place. And so I sat down with Larry and said, look, let's do this properly and open up a fund and put a proper process in place. Get the best practices from, the Valley, Israel, and actually do it right and do it properly. And so he said, yep, that's fine. I'll put a bit of the proceeds to a fund, and that's how Oxygen was born. The mandate was really quite straightforward. At that stage, the ecosystem was quite early on. I mean, it's funny to say that 5 years on we've progressed considerably, but it was really basic at that stage. It was one or two VCs around, a couple of angel investors that were dabbling, startups that were sort of floundering. Some didn't even know they were startups. We were still talking about what it was a startup, like it was crazy conversations. And now we've really progressed along, so it's fantastic to see. But the mandate was, and still is, early stage companies, seed, Series A-ish. It's all very, very different in terms of how you call it, but we place checks between 500,000 and 5 million. We've put a total of close to $20 million already into play in the last 3 years, and we've built our portfolio of companies since.
Oh, beautiful. I think what would be really insightful for the entrepreneurs in the room, what's an ideal investment for Oxygen? What types of stuff are you looking for?
Yep, so this is a question that we get asked a lot. I suppose in Australia, we're still quite open. I suppose we'll call ourselves generalists at this stage. Hard to have any investors, because there's so few of us, I suppose, if you compare ourselves to the Valley, to be really sector-focused or industry-focused. So we're quite open. I suppose our mandate is we look at only software-only companies, so we tend not to look at hardware, even though Internet of Things and hardware and robotics has really crept up on us, so it's one of those things that we're evaluating. Once again, it'll be great to see startups that are raising successfully in Australia or with international money or local money in that space. And I think once we see the momentum going in those industries, I think a lot of the local VCs will start looking at that seriously as well. So yeah, software-only companies, SaaS models. In Australia, we're really good at marketplaces, if you haven't noticed. So those we'll see quite a few of. And anything that really has a global focus. So we tend not to look at things like a copy of realestate.com that might just focus on the Australian market. We're really looking at companies that look at more than one market out of Australia. Doesn't need to be the whole world, but we're interested in one other market that's substantial enough to grow the business.
No, that's really insightful. So for an entrepreneur, say they tick off those boxes, they fit within those criteria for Oxygen, what would they have to have in play for them to sit down with you guys?
So this is one of those questions that startups hate sometimes, or founders hate, because sometimes they need the money earlier rather than later. But traditionally, and Australia, as Brendan mentioned, is a little risk averse, and I will probably support that to some extent. But we probably prefer, like us as a firm, to see a company that's got traction, that's proving that people are actually paying for their product. It gives us more confidence that we can back these people and that they know what they're doing. It doesn't mean that they need a business plan. But I have a feeling that there is something else going on with Brendan, and there's probably monetization that might not be set in stone, but one of those things where, you can see, you might not have your clarified sales channel, this is the one that's going to make the most money, but we, I suppose, want to see some kind of ability for a founder to show us that whatever they built, so they've got a problem, they've got a solution, and whatever they've built successfully is actually working to some extent, that people are paying money for it. And that's where it gets exciting for us. The earlier that is, the earlier it's interesting for us. We see a number of later stage companies that are really progressing along and getting $1 million, $2 million annualized revenue, and that's fantastic to see. We definitely look at those as well. So.
Oh, that's awesome. So sometimes it's a bit of a punch to the gut for startups that don't quite have traction yet, and that being number one criteria for investment. What would you say to those startups?
Yeah, so I suppose there's institutional and non-institutional money that's out there. And I suppose the institutional in Australia right now, and look, I'm replacing Atlanta from Signal Ventures today. I know her well. She actually used to work for Oxygen for a period of time. I know Neil well as well from the US. They'll potentially bring in a new, fresh outlook on funding early stage companies. I know their mandate is also that they need traction and product market fit. But I think those kind of seed funds that might be popping up soon might be more risk or pro-risk. I've lost my. I'm looking at that. So yeah, I think you'll probably see more institutional money taking a bit more risk. But right now, I suppose the options are angel investors and family and friends. So unfortunately, that's what we have right now in Australia. So.
No, perfect. So in terms of your deal flow, where do you normally source it from? Like, do startups come to you? Do you guys actively go out to look for startups?
Yeah, so I suppose I was just speaking to Dina before, like the ecosystem's really changed in the last 5 years. We ran a few events that really gave us sort of an identity in the ecosystem, particularly in Melbourne, and a bit in Sydney as well. And the last, I suppose, when we began, deal flow came to us quite easily. We didn't need to look out. The last 12 months, the news is almost at one point, officially there's $1 billion in the system. There's probably another $300 to $400 million worth of angel investors out there. So you could almost say there's $1.5 billion to give or take in Australia right now. So we're all looking for the best deals. And so for us now, it's not just waiting for the door knock or the phone to ring or the email to come through. Even though that's the common way to go, we have to go down, have a look, we have to uncover every rock. PR is very good for us. If there is an early stage company that's making some waves in the tech journals locally, and we'll go out there and reach and find out what are you guys up to. So that's really important. Word of mouth. So angels are now starting to talk to. So investors are starting to talk amongst each other. Angel investors and institutional. So they're starting to share deal flow. Yeah, I suppose they're the two real main things. And of course, we're still looking, we're going to see this new flow of hopefully entrepreneurs, and every VC talks about this, is, the senior management coming out of Atlassian, Campaign Monitor, Canva, we're hopefully going to see a rise of new entrepreneurs who have been part of high-growth companies that might be starting up something, that might have an idea, that might see something that no one else has seen. And those guys we're really tracking closely as well. So seeing what they're up to, even though they might not be public about it, but that's something that we're really actively building our own databases on, making sure that you never know what happens there. So.
Oh, that's brilliant. I'm going to open up the floor to questions now, because we only have Ilya for a short time. So please.
Ilya, when it comes to, you said there are two specific markets that you look at. One is SaaS and the other one is marketplaces that you look at for investment in Australia. When it comes to marketplaces, and I do understand that this could be slightly different from every company, but what are the main aspects that you look at when you want to invest in the marketplace?
Yeah, good question. So the best ones that we've seen, or we try to identify, are the ones that do two things. One, fix a major problem. So fix something that doesn't exist, or just not make it convenient for someone, but actually fix a fundamental problem. and also do it at a cheaper price than anywhere else. So if we can find a marketplace that does both of those, that's something that we'd look at seriously. So unfortunately, we're seeing a few marketplaces where only one of those are being met. And for us, it has to be really compelling to take us over the line, and data usually tells us if that particular marketplace is going to work. But if those two components are in place, it's usually something that we would take quite early on. Does that make sense? So I suppose I'll give you an example. Uber does this very well. So they do two things. They solve a major problem. People don't want to take cabs anymore. They prefer the experience of private drivers. I won't go into any other details apart from that. And they also fix the other problem is they're cheaper. They're about, particularly UberX, they're about 10 to 20% cheaper, and so they fulfill two sides of the coin there as a marketplace, and that's why I think they've been successful. So similar to Airbnb, you can do the same thing. If you deconstruct it from that perspective, they've done that well as well. So
Awesome. We have a question up here.
When would you consider something disruptive? What would be the boxes you would need to check? So I guess that's something you've got to kind of bet on. Sort of follows on with that question, I guess.
Clay Christensen was here. He'd probably answer that better than I will. But look, for us, it's how big is the market that you're trying to attack? Brendan's market's massive in this case, and he's identified that as a massive. He's identified a problem and a solution and the market itself. Once you can start creating a compelling story behind how big the market is and how much and the problem that you've identified, and the solution effectively that you're coming up with is going to disrupt that whole market, that's probably what we start to evaluate. So once again, that's why I was saying that we're trying not to look at Australia as the only market, prefer at least one other market, because then it becomes more compelling for us.
Awesome. So we have time for one more question.
Other than bringing money to the party for the startups, what else do you provide or offer in terms of their journey? If they've got weaknesses in their teams or they need to add in new skills over time, do you help with that sort of workload with them?
So this is a question I probably want to just expand on a little as well, because it's more of a sort of a larger response on the different types of funding that you can get in the system as well. So traditionally angel investors, which is your first money, if you get a chance to reach them, they're really hands-on. They want to make sure that they're an advisor, they're a mentor, they're effectively the people that have trusted you to take a concept into something else. Then you've got, I suppose, institutional money, and there's two types right now in the system. There's effectively family office institutional money, and then there's fund institutional money. And then with the fund institutional money, there's actually two types of strategies that you can follow. So with the funds, I suppose there's a portfolio play where they'll try to, build up their portfolio of 20 to 30 companies, per year. And those guys are usually hands-off. They'll come in and they'll go, okay, I'll write you a check, let's co-invest with somebody else. And, that's it. It's usually a hands-off play and they trust you. You have to give them management reports, make sure that they know what's happening, but it's usually a hands-off approach. And then you have institutional funds that probably look at sort of a 3 to 4, 5 companies per year, and family offices, which sort of sit in the same bucket. And they're very much hand-holding, kid-glove type strategies. They'll help on a management perspective, HR, help with hiring. So that's what we tend to do. So we even go to the extent of, helping out, if you need an executive or if you need a CTO, or we'll help out and get our team involved in hiring. In our case, we've also got the benefit of other companies that are within our group. So we've got a 7,000 seat call centre in Manila. So if any of the portfolio companies need outbound sales or customer support, we've got a very cheap option for them. We've also built offshore teams. So in Manila, we've built for one of our portfolio companies a whole development and QA team that they really sort of desperately needed at a third of the price. So they were really grateful for sort of our help on that. And I suppose from our perspective, we take a smaller portfolio approach and take a white glove sort of strategy, making sure that our portfolio companies are really supported. The founders are really morally supported, not just financially supported as well, and make sure that they know, give them an idea of where to go. So that's sort of our strategy. We believe sort of that's how it works. Sort of that set and forget really is not what we sort of are in the game for. So
Just on that, how many companies are you invested in at the moment that you're actively working with?
yeah, so we've got 6 in our portfolio that we're really, actively involved. So it's 6 over the past 3 years. It's not a very huge portfolio, but for us, it's making sure that those founders are supportive. All of them have grown, crazy amounts, and hopefully we'll have some good news this year. A few are going to be raising their next rounds. One's looking to exit as well. So we're really just, that's our focus, to make sure that those companies are really taken care of and making the right decisions, and not making the decisions for them, but making the right decisions.
Perfect. A huge round of applause for Ilya. Thank you so much for coming.